Good evening, friends. We are starting the another session with me, and this session technically is on how to start looking forward for the right export market. The topic becomes all the more pertinent and of importance to the small and medium enterprises and to the new companies who are trying to understand how the market would function, how the global market would operate in the post-COVID scenario. Because if you see, friends, in the COVID scenario, when the demand in the international market are almost shrunk, you have the companies fighting to maintain their export share. It becomes very difficult both for the established companies or the exporters, as well as for new companies who are trying to enter into the export market. We are trying to take a call through this session that whether you are a startup company or you are a small and medium enterprise and wanting to venture into the export market for the first time, how do you technically take a call that out of so many countries in the world, which is the most appropriate product category that you should choose that we saw in the last class? And for the most appropriate category, how do you hunt for the buyers and how do you hunt for the right market on the parameters that we will learn today? A lot of parameters goes in identifying a new market on board. So if you start looking forward for the session, that if we have to fish for the right export market, we are technically trying to take a call what goes in the mind of a company when they try to look forward for identifying a buyer or an export opportunity. Because it is a very, very important exporter's anxiety is these six questions that this come. What should I sell in the export market where my return over investment is ensured? What and where should I sell becomes the next question. If I've selected the product on the basis of the parameters that we have seen in my last class versus the answer on the question where should I export in my current class, it is equally important that sometimes the product and the market are great, but the timing of entering into that market is not that. So we need to identify the market opportunities in the global market. At the same time, we need to pitch the right product in the right market. And it is also equally important to pitch the right product in the right market at a right price using the right foreign trade policy, using the right kind of a buyer, the risk assessment of a market, the market scanning process is what we will learn, and how do you understand the entire ecosystem and parameters to go global in terms of a lot of product categories and case studies across different sectors. So the confusion actually begins that you may be confused as an export startup where we are targeting through this program primarily the small and medium enterprises who have so many opportunities to source a lot of these products, and you equally have so many opportunities to explore whether I should, now the China has collapsed, US is an opportunity, but there is a huge COVID scenario. Europe traditional destinations have outgone. Should I target the US and European market post COVID? Should I look into Japanese market? Should I look into the African market? What comes to a mind of an entrepreneur? And again, I'll again try to bring home a point that at this point of time, when you are a startup, you have these four options in mind. The options that every exporter has, that you take up a very, very cliche product, which is an old product, and start working in the old destination. In my last class, we have seen how traditional destinations are explored using traditional products, where the competitions are typically very, very high. Today, what you're trying to understand is a vertical shift, that how do you take a call that uh, I was exporting a very, very traditional item from India. For example, I was doing some leather exports from Agra. I was trying to look forward from gems and jewelry where you're selling a lot of these polished diamonds from India. I'm doing a lot of textile. I'm doing a lot of electronics from India, auto components from India. So India has a huge export strength when it comes to the MSME basket. Almost 6,000 commodities is what my MSME basket is all about. But I technically face a challenge towards enhancing the MSME exports in the old destination because of huge numbers and huge competition, I get killed across a lot of Indian companies who are trying to target the same destinations of US and Europe over and over and over again. And that is why one of the endeavor of an export startup should be, if I do not have a bandwidth to start working on shifting from old product to a new product concept, which means that when companies approaches us, we try to understand and help give them a hand holding support on how you can become unique in the same product category that we have seen. Please refer to my last sessions. But sometimes the companies do not have the bandwidth to shift to a new product. In such a scenario, they still want to start their opportunity as a trader in a certain commodities which are very, very traditional in nature. So that traditional mindset of taking a risk-free product to a new destination becomes the only opportunity. So that when I shift to old product, new destination is what we are trying to talk about. So at this point of time, we are trying to look into two reasons why a company, whether it is established company or you are a new company, why should you be looking forward for targeting into a new destination is for a simple reason that we might not be exporting what the world is demanding. So either my product categories are wrong, or if my product categories are right. For example, India is a leader in chapter 85, which is electrical machineries and equipments. We are also doing well in organic chemicals. We are doing well in marine products. We are doing well in pharmaceutical products. There are a lot of commodities where India is a winner in the growing sector. Howsoever, there are certain sectors where India is not doing that well, which is, and even the world import demand of these commodities is shrinking. For example, in the ready-made garments, 61 HSN code, 62 HSN code, 52, which is cotton, we're not doing that great as in both in terms of performance of India in the global market, where India, of course, is a net exporter of these commodities because our export is more than the import. But at the same time, we are not the great we are the losers in terms of our market share in the global market. Now, in both these scenarios, if a company is already dealing into cotton exports, should they switch over to the product categories? And if they cannot, do they have any option? And that is a time, it is a time for us to think that if I am into a product category like organic chemicals or pharmaceuticals or gems and jewelries or electric machineries, the world is looking forward for these commodities and India is a great winner in this particular sector. But are you the only one supplying these products? So the competition to any startup is technically coming from three levels. The first level of competition is a lot of other Indian companies who are already into that product category. Until the time you understand a shift from old product to new product, where you're trying to understand the concept of national tariff line that we referred in my last session, how and the parameters on which we should select an export product. But you will have at any point of time, if your products are not very unique and it's a very, very traditional old product that is exported from India traditionally, you will find that you are still thinking to enter a market. But then there are a lot of Indian companies who are already existing in that product category before you existed. Okay, there may be a very, very unique product from India that you're trying to explore the opportunity to export. But then the Chinese competition will kill you. A Brazilian competition can kill you. There are a lot of level 2 competitors in the same product category. The third category comes, for example, you are a leather company or a leather trader, and you're trying to look forward to explore an opportunity in the European market. So you have level 3 competition coming from domestic companies in the importing countries. So there are a lot of Italian leather companies who are locally offering their opportunities to the local markets of Europe, and that becomes a very, very difficult proposition. To name a few sectors, I would like to revise. For example, one of the most sought out of sectors for MSME is a handicraft opportunities, and you will find that in sectors like commodities like glassware, our biggest competition coming from Chinese, capturing 21% market share as against India, only 0.8% market share. Same for Muradabad Pital. I mean, we talk it as a Pital Nagari. We also have a geographical indication. Again, Chinese metalware products give us huge competition as against just the 0.8% of India. You name the same situation arises as China, Germany, Spain becoming the level 2 competitors for commodities like ceramics, and even in the bamboo sector, Vietnam and China becomes my largest competitor. So for certain commodities where India traditionally had a production strength, we have a huge competition when it comes to these countries capturing a better export market share. Hence, they are your level 2 competitors. Why only handicrafts? You can take for agricultural sector. Tomorrow, after the COVID scenario, the market opportunities in Middle East, market opportunities in entire Europe is gonna be very, very high for organic fruits and vegetables. Belgium, for that matter, is one of the countries that eat maximum bananas. But are we ready to explore this market opportunity against the competition coming from Costa Rica, coming from Colombia, and all these Latin American countries? For apples, we are the net importer of apples for that matter. So whether it is a meat product or a rice or a pulses product, we have a lot of these L2 players have an agro space. Let's not forget the electronic sector. I mean, we have huge competitive advantage in Chapter 84, Chapter 85. But again, it is just 1% of India's share, 0.5. So I'm not trying to discourage you from exports. But the session that we are trying to deal is that we are aware about Chinese competition being very, very high, which we expect post COVID to a certain extent because of the supply chain disruptions because of COVID in China. There are certain sourcing that is expected to deviate from China towards the Indian companies. And that is the reason this is a very crucial time, guys, where we are trying to take a call and seeking the opportunities in in few of the very, very important sectors in certain very important market. Is it the right time to export to the US and the Europe? Is it the right time to look into the opportunities that China must have been offering you? Is it the right time to take it for granted that the China economy is hit by the COVID and hence the market opportunities come in favor of India? Now, all these are very, very pertinent questions, and that is why in order to exploit these opportunities in the traditional destination by the expected fall of Chinese, which is my typically biggest L2 player, and I used to miss my price competitiveness against the Chinese companies because of the price competitiveness issues on the economies of scale. So my startups never used to be able to work at that economies of scale, and that's the reason in a third country market, Chinese competitions were just killing India. So how can I be more competitive, and why is it the right time to shift from the US, European, Japanese market to the newer destinations of, for example, Latin America, Korea, CIS, Africa? And how should your approach be becomes extremely important for a simple reason that, for example, I was a traditional carpet exporter to the US market, and there is an 8,000 rupees crore rupees loss for the entire handicraft industry in the COVID scenario. There's another 1,200 crore rupees loss in a carpet industry where the buying leads in hand pre-COVID scenario completely got lost in the COVID. Now, what do I do as a trader? All my export orders in my traditional destinations of Europe has gone for a toss. Friends, this is the right time to utilize your government policies, which is the MEIS benefits that the government offers for category A, B, and C markets. And it is a right time to explore opportunities in a new destination where India must be having a trade agreement. So while we will discuss about the business implications of the regional trade agreement and how do you identify these opportunities depending on the product that your company is manufacturing, is my next session with you on next Saturday. But yes, the rationale of looking for opportunities in a new destination comes. For an old destination, the benefit of the government scheme might not be that much. But for a new destination or for an emerging market, maybe the MEIS benefits are better. So that makes sense to shift for you to shift from old destination to new destination. At the same time, suppose I have I have an opportunity to sell my products in three countries. One is Latin America, second is Africa, and third is ASEAN. How do I prioritize it? While we will see other parameters, but if I were to combine the two rationale or a push factors from old destination to new destinations, technically in Africa, Latin America, and ASEAN, I will have the benefits of the MEIS because all of them are emerging markets. So, Government of India would offer me this benefit under my foreign trade policy. At the same time, with Africa, I do not have a trade agreement, so to say. But with ASEAN, I have a free trade agreement, and with Mercosur, I have a preferential trade agreement. So, because logistically, a lot of these Southeast Asian countries offer a huge opportunities. वो opportunities क्या है? What? How do we explore that opportunities, product by product, market by market, and how do we approach buyers in that market becomes a very interesting exercise. But my first and foremost opportunity in this example would technically be countries जहाँ पे I get better tariff advantages compared, because if I have to become price competitiveness, my prime concern would be every penny saved is every penny earned. So I would like to explore markets where I can, without compromising on my profit margins, if I can economize on my logistics cost, if I can economize on the import duties, all becomes relative against the level 2 players. So when it comes to Southeast Asia, I have a logistics advantage against a lot of these level 2 competitors. If I were to select ASEAN market, I also have a tariff advantage because I've signed a free trade agreement with them, as against the Mercosur market, which is relatively more logistically further, but I have a preferential trade agreement which Chinese may not be having. So Chinese will enter at the WTO rate of duty and I get something less than World Trade Organization duty. So I get an opportunity to price my product very, very beautifully utilizing these two push factors. So this is your MEIS benefits that we were talking about, category A, category B. Please explore, and you should have it on your tips while identifying the market for your commodities. We should know Government of India, which market is in the radar of the Government of India. So if you find buyers in that market, you have, for example, this is an MEIS entitlement, and as per the recent announcement, the MEIS will now be replaced by another scheme, which is remission of duties or taxes on the export product. So we have this entitlement until now at 4 levels, which is 2%, 3%, 5%, and 7% of your FOB value of the notified goods. So when we are talking about the FOB value of 2, 3, 4, 5, and 7%, we have these category A. So in category A, you had all these old destinations, which are certain traditional markets, where 28 European Union market are ones that we used to get 2% benefit, US and Canada. Which are the ones falling in category B? These are emerging markets, or so-called the focus market. There are 139 such countries where if you look into the opportunities to sell, the Government of India will offer you an added benefit beyond 2%. So it could be 3% to 5%. Africa, 55 countries of Africa. So why running after US and Europe, where every Indian company is running to the same market? For a startup, it becomes a very difficult proposition because you lose a bargaining power, because the demand from India, the supply from India is huge against the demand in that specific old destination. So the bargaining power goes to the buyer side. Alternatively, I would suggest the startup should find its own virgin market. Maybe India is exporting to that market, maybe the L1 competition is minimalistic, and maybe आपके L1 ने वो opportunity अभी देखी ही ना हो. So why should I actually run after the markets where Indian companies are already present? I should gather and understand the process that we are learning today to find out my own destination, for which the MEIS benefit becomes a very important thing. And that's the reason we have this category A, category B, and in our category C, you have 70 other markets. So look for a buyer in Taiwan, look for a buyer in Japan. You have two benefits. You also get MEIS benefit. But if you look for a buyer in Japan, South Korea, you also have a free trade agreement with these countries, and that added benefit helps you to price your product better as against your competitor, right? So in that context, you should have, and priority, you should have been looking for exploring opportunities in the new destinations of Peru, Venezuela, Brazil, Argentina. Then you have Bolivia and all these countries. Chile, for that matter, is a great market for a lot of these yoga products from India. We'll talk about these opportunities right away. Africa is another very interesting market. CIS, where you have all these Commonwealth independent states coming from. You have Armenia, you have Kyrgyzstan, Kazakhstan, Turkmenistan, Uzbekistan. A lot of these countries offer Indian companies a huge, huge benefit. Instead of, if you are targeting Europe, so you have huge competition in countries like France, countries like Spain, Germany, Italy, which is your traditional destination in category A. You should be trying to look forward for countries which are Eastern European countries, Poland and Hungary, where a lot of constructions are happening, and therefore a lot of business on home textiles is going to come by 2021. So there are newer opportunities across the global market that we should be hinting on, and same concept goes for the ASEAN countries, where you have a double benefit of 3% of FOB value as a duty credit script benefit, plus we also have a free trade agreement, plus we also have a better logistics. So the endeavor of this session is to shift you from COVID hit traditional destination to lesser COVID hit countries, which are technically, if you see, all the ones in grays and yellows are the ones which are a great opportunity to an added factor post COVID. So MEI's benefit is one, free trade agreement is one, and less COVID hit is one. Africa, hardly any cases. So we should explore opportunities and in countries, and where if you find out that you're trying to take a call from selling your carpets and selling your ready-made garments, the Italian market is completely lost. So until the market is reviving, I think the startups should technically hit African markets, Latin America, CIS, Canadian market are the ones which are very, very interesting market for you. Okay, step one. We've seen a lot of rationality that why should you be looking forward for a new destination and what are the push factors logically? What should be the step? Now, step number one, I will try to see which are the countries in the world who are going to buy my product. Technically speaking, one of the biggest mistakes that a lot of Indian companies do is to follow their acquaintances in the foreign market. A lot of companies come to us which talks about that, ma'am, we have a friend in Canada, we have a relative in US, and that's how they start their export journey, which is not a very appreciable way. It certainly facilitates your stepping stone to understand the market, and you have an acquaintance who can help you push your products in that market. But is it the right market at the very first instance is where we have to understand the L1, L2, and L3 competitor, which your acquaintance might not be able to understand. So the logical procedure technically is that whatever product I manufacture in the domestic market, we have to first visit the DGFT website to technically see whether the product is allowed by Indian government to be exported. Second thing, this is what we learned in my last class. If the product is in the OGL category, means it is free to export, we should also look into an opportunity where is there any prohibitions. Let me show you the document now. You should visit the DGFT website and you should look into lot of market specific requirement. Many a time the product is in the OGL category, but there are certain countries where your products are prohibited to export. For example, I am dealing in the business of diamonds, which is one of the great products for gems and jewelry. But in a normal scenario, the HSN code 6-digit level, they are allowed to export from India and they are free to export. But many a times what happens? If you are exporting to certain specific countries like Cote d'Ivoire or Venezuela, it is a complete ban of export. Many a time the product is prohibited to export, but for certain countries, they are allowed to export. And where do you get this information? We go to the DGFT website, we go to regulatory updates, we click on the foreign trade policy and the documents, and I look for a foreign trade policy notifications, and I try to see the benefits that the government will offer me, and I look into all these notifications. So this is a main foreign trade policy, and then you get the import-export policy. This is the export policy. So you can look into the export policy, which are general reading notes of the export policy. So you will find that your HSN code at a 6-digit level are classified as free goods, which means that the product is free to export. You have the basic documentation as IE code and you're looking for a buyer, no questions asked. Then you have restricted goods, prohibited goods, there are certain canalized products and these comet products. Now, what we have already seen this in my last class. What is important now when we are doing a market identification exercise is restrictions on countries of export. So don't go by demonstration effect. You see somebody exporting this product to some other market, but you need to be understanding that there are a lot of amendments that the government makes. So the same product which may be in the OGL category may not be exportable to a certain market. Alternatively, exemptions granted for export to a certain country. So export of milk powder, wheat, edible oil, pulses are exempted from any kind of ban without any quantitative restrictions. So we need to have these special conditions which we are knowing that under which product category, like special conditions for export of certain processed or value added products. So this means the export of these value added products will never be facing any kind of export ban or restrictions. So HS code 19, which is where a lot of these branded companies are selling their namkeens and milk products and cereal flours and all can never face an export ban. So we need to understand the country specific, product specific relationships. For example, the exemptions are granted for export of certain quantities of essential food items to Maldives. So please look into these market specific, product market specific combinations which are a part of your export policy. So once we have done that on a DGFT site and we know that the product that you have selected is technically in an OGL category and there are no riders attached whether it is exempted to a specific market. Now when we know that any market we select and we make an effort to look for a buyer in that market, there will be no restrictions from the government side, then it makes sense to explore the 200 countries in the world through the steps that we have learned that who will buy my product. So let us take an example of how we will select these countries. Number one, once we know that the countries, for example, out of 200 countries in the world, I find that, let's take an example of basmati rice. Now, if you want to start an export of basmati rice, and you've seen that the government has no restrictions about exporting this particular commodities, and you get your IE code from the GFT, you can start looking forward for countries in the world which are the buyers of your product. How are you going to do that? Is a ready-made exercise where you just have to put in your HSN code and you get the list of buyers internationally. Isn't it interesting? But before venturing into the buyers game, we need to be very cautious about whether I'm selecting a buyer in a specific market. There may be 3 companies sitting and listening to our speech today, but the one company may be established company of a very reputed brand, The other company may be a domestic trader who have actually established a rice business and a brand in a local market of Punjab or Haryana. And the third could be a completely different startup who wants to just become a trader of rice without having any domestic setup of rice. Now, we need to understand how their decision of selecting the right market will be different right at the step one, because we also need to understand what is your risk appetite of each company, what is the investment size of each of these firms, who are your competitors, and that if the competition is very huge, then a lot of startups we refrain from selling in those markets. So we talk about step by step in that market. So I'll start with step one. How do you get to know which are the countries in the world who are technically the buyers of your product? So let us talk about. So I have already apprised you, and we have seen the website in the last class of the International Trade Center, which is a compilation by as of 6,000 trade statistics, and it is helping to structure these trade statistics for an international business development. So they have monthly data of imports. They also compile it at an annual level, at a quarterly level, and both import as well as export. So we get a lot of these business insights and inferences about the growth, the possibilities of sustainability of import demand in a particular market. And since it is going at product by product, so many a times we found that the minute I change a small GSM, for example, I'm a textile company. So the minute we change the GSM of a particular product, my buyer would change. So it becomes extremely important for me to take a call of a right 6-digit code and matching to a right market. Let's talk about, I mean, in the morning today, we were trying to work on for helping a company dealing in HS code 610710, and we've actually been able to crack this deal only because the company was hell-bent to sell a particular export product. So if you are stuck with a certain product category which is manufactured in your factory, we will our approach will be different. If you are stuck as a trader at a back end, आप कुछ भी ट्रेड कर सकते हो. So आपके पास लिमिटेशन नहीं होता है that you have to export only this particular HSN code. दोनों का अप्रोच कैसे चेंज होता है, let us see. Now suppose I have a 6-digit HSN code or I have multiple opportunities. So आप इसको दोनों तरीके से start कर सकते हैं. Your acquaintance, your friend is sitting in, for example, a Brazilian market. So what will I do? I will, and you are a trader. You are eyeing this from a concept of a trader. So trade map will give you multiple permutation combination. It covers 220 countries, around 5,300 products at a 6-digit HSN code, and which technically means, suppose my friend is sitting in Brazil or my relative is sitting in Australia, and then you want to utilize or exploit. I'm giving you a very, very practical situation, understanding and appreciating the approach of a lot of startups that comes to IAFT for help. So what we do is that we will go to this international database, and I will not repeat you the process. You can see my name here only because I have logged in, but you can create your own account, and it is free of cost, and you can just create your own account. The way you follow the process we have otherwise referred to my earlier session on product selection. So now we move ahead. I am not sure. I'm a trader, so I can do anything. I mean, I just want to earn my margin, so I can do absolutely any product category. Okay, so I click on Brazil, and I do not write anything at the product category. I do not write anything at the partner country. I just try to see which are the commodities that Brazil is interested to import. Okay, so I'll do a trade indicator, and I'll get to see at a chapter level. We're not moving at a product level, guys. At a chapter level, Brazil is the largest importer of mineral fuels. I would not say that they are the largest importer of mineral fuels in the world, but when you stand and look for Brazil opportunities in the Brazil market, they are the biggest product category that is imported in Brazil is HSN code 27, followed by electrical machineries. Now, how beautifully is this combination, guys? Brazil is one of the largest importer of chapter 84 and 85 and 87. And if you look into the India's strength of export, through my first slide, I will I will want to refer to this slide once again when we talked about India as a winner is a growing sector. Again, you have 85 HSN code falling in the same space. So this means that there is a rise in import demand of 85 electrical machineries in Brazil, and India is a winner in this particular sector. So as a startup, if you pick up chapter 85, Brazil stands a great chance, and you also have a free trade agreement with Brazil, and that gives you an added price competitiveness. Brazil also have a benefit of the MEIS focus market scheme, and that in added advantage can better it out. Now challenge आएगा within 85 वो exact product कौन सा होना चाहिए that you should be selling and utilizing the presence of your friend or acquaintance in Brazil. So this is an approach that we do when you shortlist a market and then see which product is Brazil selling, rather than depending on your business on what you can source from. So don't look for, you need to work out at one level. Either select Brazil and try to look what Brazil imports. Or many a time companies say that, ma'am, I'm from Saharanpur of a cluster of UP. हमारे यहाँ तो लकड़ी का काम होता है. So then we will fix the HSN code 44 and then start looking which is the market where I should find a buyer. Right? Most of the time the companies make a mistake that sourcing भी मेरी fix है, that मैं लकड़ी के अलावा कुछ और source नहीं कर सकता और मेरा दोस्त ब्राजील में है, so they start selling and start looking for opportunities of selling HSN 44 in a Brazilian market where you do not find this product at all in their import basket, for a simple reason that we will try to show. People have started utilizing Indo-Mexican trade relations, selling silver for that matter, and Mexicans have huge L3 player because they are rich in silver themselves, so you will hardly find an opportunity there. So the point that I want to bring home, guys, is that either fix the product and then look for a buyer, either fix a market and then look for the product category. That's the best approach to get into this whole thing. Now when I have shortlisted at a 2-digit level that the product categories that are being imported from into Brazil is mineral fuels, it is electric machinery, 87 organic chemicals, fertilizer, plastics, and pharmaceutical products. Now, how do you get into the next step? The next step is that we will click here on the plus sign to actually see what are the product categories at a 4-digit HSN code. So within mineral oils, it is 2710, that is petroleum oil, is what? Let me give an example, better example, considering you all are startups. Say for example, it is machinery and mechanical appliances, because mineral fuels is an industrial product. So maybe you're looking for electrical machinery. So you click on this plus sign here and you get to know that Brazil is technically buying telephone sets. Within it's buying electronic integrated circuits. It's getting a lot of transistors and transformers. Even I will not allow you to stop at a 4-digit product category. Maybe I can go further at a plus sign and I get to know what specific product at a 6-digit level. I mean, it's not only just a any telephone for that matter, it is a parts of telephone sets. I will not allow you to even stop at this level. Please refer to my earlier session. The way we sell the same 6-digit code to different countries in the world, the specifications changes. You again click on this plus and it takes you to the further line. That's the beauty of a free software that you find online, where you go and understand the nitty-gritties of selling a particular product in a particular market. That's an approach that we are talking about. If you have, for whatever reasons, you know that you have no choice but to look for a buying opportunity, selling opportunity across a typical export market. Let's take another scenario. You have a domestic company which is manufacturing a particular product. You do not have a bandwidth of changing the product because in the lockdown period, your inventories have piled up a lot. Your traditional destinations where you already had buying leads are no more with you and they're not entertaining your existing export orders. So you're trying to look to sell off the inventory. At that point of time, I'm not bound to sell to Brazil anymore because my old destinations are not entertaining me. I'm exploring opportunities. Product मेरा fix है. I'm trying to see the opportunity कहीं भी बिक जाए. I have to just sell it off and try to seek an opportunity. So let's take another very interesting product category. Maybe let us take your example of 1000630, which is our basmati rice. We've done great business in basmati rice in a lockdown period. So in this scenario, my approach I will not mention anything in the country. I have a product with me and I will not write anything in the country and I will click on trade indicators, and this is suddenly giving me a long list of the countries which are ready to buy the biggest importers in 2019 for my rice. I'm not talking about specifically for basmati rice, but they are importers of rice for that matter. So that is what we talk about. The very first step that we are referring to is step 1, who will buy my product. So I go to trade map, I select the HSN code that my domestic factories are manufacturing. Why I'm referring to again and again, mention the right HSN code for a simple reason, guys, because just have a look. If this was 100630, my biggest buyers were Iran, Saudi Arabia, China, US, Philippines. Now, if you make a change from 630 to 640, most of the time companies don't realize the importance of identifying the right HSN code. And that is why you will end up looking for buyers and wasting your energies focusing on a wrong market. So the minute I change it to broken rice, my market becomes an African market. So Senegal, Benin, Ghana becomes the topmost buyer. So that's the reason it is very, very important for us to identify the right HSN codes. Since Indian basmati rice is our strength, we are doing very, very well out of all the varieties of rice. It's 630 that's technically driving the show. So let's talk about how do you identify. I mean, it could be a pharmaceutical business, it could be anything. And I'm just helping you to understand the process, taking example of rice, but the process remains the same. Now it's an interesting process. Now, friends, if you very, very closely observe the sheet, you will find the first column talks about the value imported in 2019, and the software automatically organizes it from high figure, which is the largest buyer, to the, so it is, the data is organized in a descending order. So you have Iran as a largest importer, and then Saudi as a second largest importer, China as a third largest, and so on and so forth. The next very interesting column is the column of trade balance. Now, the trade balance theoretically means that it is a value that is export minus import. मीनिंग ईरान ने 2019 में कितना चावल इंपोर्ट किया और उसने चावल कितना एक्सपोर्ट किया. इट डजंट मीन दैट उसने चावल का वैल्यू एडेड प्रोडक्ट किया है. It is the trade balance for the same 6-digit HSN code, meaning how much has rice been imported in Iran and how much has rice been exported. Now, there are countries like US, and closely observe, there are countries like US and in the first sheet, you will find all the other markets are red in color when it comes to trade balance. It is only US as a country which has a positive trade balance, a black in color figure. What does it mean to me? Friends, it is very, very important for us to know who is buying my product. मेरी फैक्ट्री में जो माल बन रहा है उसका एक पर्टिकुलर 6 डिजिट कोड है. मेरे लिए जानना बहुत ज़रूरी है that दुनिया में वो प्रोडक्ट कौन कौन खरीदता है. At the same time, it is equally important for me to know कि मेरा बायर मुझसे खरीद के उस प्रोडक्ट का करता क्या है. And that is what trade balance is to an extent helping us to understand. If the trade balances are negative, it means that the country import of rice is more than the export of rice, which means that the countries are technically importing for the purpose of domestic consumption. Howsoever, in countries where you find a black color figure like US, it's a positive trade balance. ये जितना चावल इंपोर्ट नहीं करते हैं उससे ज़्यादा एक्सपोर्ट कर देते हैं. So it certainly gives me somewhere down the line, it gives me an assumption that the countries are buying for the purpose of trading. They are trading economies. They are more than consuming what they import from me. They are also the net exporter of that product. So somewhere down the line, I can assume that they are importing for the purpose of re-exporting. Now, it is a very big business insight for me because of a simple reason. If you remember in my last class, where we have done the concept of national tariff line, which indicated that every country has a consumption pattern to absorb the same 6-digit HSN code. I gave you the example of pearl industry, which is, for example, if you're trying to sell the white pearls from Hyderabad pearls to the international market, you're trying to pitch the same product to the Japanese buyer and you're trying to pitch the same product to the Brazilian buyer. Now, we have signed a free trade agreement with Japan. We have also signed an agreement with Brazil. Despite reduction of import duties that the Commerce Ministry must have negotiated on this HSN code, we were not able to find a lot of market opportunities. So whose mistake is this? Government has done the job. It is our job to understand the same 6-digit code. The way it is sold in Japan will not be sold in the Brazilian market because the woman in Japan who will wear the necklace of this pearl is shorter in height. So they want smaller diameter pearl as compared to the Brazilian woman who is a very, very tall in height with very tall neck, and they have even identified the size of the pearl that they would like to receive from you. So the rationale of why we are revising this concept, that same 6-digit code would be supplied in different countries' market as per the consumer perceptions of using that particular concept that we learned as a national tariff line. Most of the companies that make a mistake is जो factory में माल बन रहा होता है वो किसी भी buyer के साथ trade fair में ले जाते हैं, and then they sit in the stall struggling to find competition against a Chinese stall on a same trade fair. So we need to realize the fact that if the country is an importer of your product, and the country is a balance of trade negative country. This means that a lot of product that the countries are importing are basically for domestic consumption, and which again would give you an inference that if the country is a BOT negative country and the product that they are importing, they are not re-exporting like the way US has been doing. So it makes sense for you, if you are participating in an Iranian trade fair to sell your rice, we need to understand ईरान क्या खाता है, क्या पीता है, उसका consumer behavior क्या है. For example, Philippines is also a BOT negative country. Malaysia is also an importer of rice. Countries in Southeast Asia has a typical way of eating rice. If you sell them a khila basmati rice, it will be a complete flop show because they eat rice by chopsticks. So it is very important if a BOT negative country is there. So you need to understand the consumer behavior to understand whether your product will be sellable in that market or not. So if you are selling an Indian Khila basmati rice to a consumer, which is a Lao PDR Vietnam, if they are consumers, and a BOT negative market, even then it will be difficult for you to sell your product because they eat by chopsticks. So they need sticky rice for a convenience factor to pick and choose. So their buying behaviors are the way it is also a rice. So rice is not rice everywhere. So it is about different species, it is about different varieties, it is about different consumer behaviors, and therefore it is very important for us to customize our product as per the need. I'll give you multiple case studies as and when we proceed in the session, that it becomes responsibility to cater to the national tariff line and customize your 6-digit HSN code to the buying behaviors of the foreign country buyers if you are targeting a BOT negative market. Howsoever, in countries like US, please don't invest your money and energy to customize your product as per the consumer behaviors of US, because they're technically not buying to consume on their own, they're buying for trading purposes. Also, it also brings home a point that for a startup, please opt for a BOT negative country as compared to a BOT positive country for a sustainable business opportunity, because a BOT positive country, which is technically flooded with big traders because they are buying for the purpose of trading and not selling as a retail brands in their retail domestic stores, they will prefer to do business with bigger brands from India. So somewhere down the line, the L1 competition for startups who does not have a huge working capital to have investments to improvise their economies of scale as much as an established Indian brand is able to do, for them targeting a BOT positive market becomes slightly difficult. Another reason of why we push the MSMEs and startups to go for a BOT negative market is also because a country which is a BOT negative country, that country is announcing that I am the largest importer of this product. This means which level of competition is minimal? L3 level of competition is minimalistic. And what was level 3 competition? आप अपना माल जिस भी कंट्री में बेचते हो वहां पे भी तो लोकल कंपनीज होंगी जो वो माल बेच रही होंगी, आप भी उसी कंट्री के कंज्यूमर को अपना you're targeting them as a buyer. They are local companies manufacturing the same product and catering to the same buyer. So it becomes very difficult for you as a challenge that you will bear the cost of shipment and duty by the time you reaches there. They are the local companies. So in order to cater to an L3 competition, it is very great. Higher is the BOT negative. This means L3 competition will be minimalistic because they are the net importer. और कोई country कब import करेगी? या तो वो उस product को produce नहीं करती है, so the local production of that commodity is not there. In case of Iran, maybe the climatic condition doesn't allow the rice production. So it could be anything, but it is an indication that either the local production is absent, or even if the local production is producers are there and the local production is happening, it is not catching up with the consumption of that particular product, and that's the reason the country is becoming a net importer. In such a scenario, the small and medium enterprises and a startup will not face a lot of restrictions at a custom level, because उस country की government को कोई incentive ही नहीं होगा. Why any country restricts an import in a form जो import duty बहुत high कर देगा, if under the pressures of WTO import duty घटाना भी पड़ गया तो non tariff barriers will be very high. मतलब वो आपसे इतने सारा certifications demand करेगा, phytosanitary certificate, ये certificate. So the list of compliances will be very high if the country is not interested to buy from any other market. But since it is a negative BOT, they are in need of that product. So sare restrictions, both in terms of import duty and in terms of other certifications and compliances, are expected to be minimalistic. That's the reason it becomes very important for us to analyze the high BOT negative country. Okay. Now let's take a next point. So who will buy my product is clear. What's the next step? the next step is the demand increasing in this market? So when we go to trade indicators of trade map, it's technically depicting year 2019 figure. But in order to help, because if I am trying to export to a particular market, it takes a lot of energy of establishing my brand in a particular market. So I need to see a sustainability of my business in that market. So therefore, the advice is that please don't get carried away by the last year figure. Please see a rising trend in at least 3 to 4 years. So what we do in trade map is the trade map gives you an opportunity to look into. आप इसको Excel में भी download कर सकते हैं and you can just try to see. Otherwise, what you do is you can actually see the annual growth between last 5 years. So if you look into the Iranian market, it's a 12% growth, which is a positive growth. So the demand of rice in this market becomes a very, very lucrative market for the rice exporters from India, because the growth rate is 12%. It is a negative balance of trade, such a high amount of BOT negative values. However, if you look into even Saudi Arabia for that matter, it's just 2%. However, Philippines is a better market. It's a 37% growth of import, although it's also a BOT negative market, but it is a fifth value. So the next criteria that I have to see, that is the demand increasing in that country. And if you want to see a 5-year figure, what you can just do is just shift this trade indicators to yearly time series. And this yearly time series will technically try to help you understand the exact absolute value of import of rice. So you can see in Iran 681 now went to 690, and then it crosses 1000 and 16 and 164. Such a beautiful market. पिछले 5 साल में import drastically बढ़ा है. It gives you a conviction that ये सिर्फ 2019 का largest importer नहीं है. Last 5 years से इस particular product की demand is technically increasing. So that is an important game that you need to work on. So if you go back on the logic that we have just seen, guys, we see that, okay, if Iran is the largest buyer of rice in the world, let's start looking for buyers of rice in Iran. So before looking for buyers in Iran, we will have to understand that जो data हमने अभी देखा है उसमें India कहीं figure out नहीं हुआ है. It only says that the product that I manufacture and जिसका हम export opportunity देख रहे हैं, which country is the largest buyer in the world. It never says that Iran is the largest buyer, but it doesn't say it buys from India. So it is important, by seeing a BOT negative country, we have taken care of L3 level of competition. But we also have a level 2 competition. So what we do is we click on Iran to see who are the other countries in the world apart from India that Iran buys the rice from. And we are very, very happy to see that 98.5% of the total rice that is being imported into Iran is technically coming from India. Certainly a very, very great news, but then there is an alarming signal. If India is the largest exporter of rice in this particular market of Iran, this data may be a very interesting data point for the government of India. This data may be a very interesting point for the established companies who are already into this business of exporting rice to the Iran market. Imagine if somebody in audience today gets a kick that this means that I can also start sourcing rice. Maybe you're from Punjab or you're from Haryana or any rice producing state, and you say that ये काम तो मैं भी कर सकता हूँ. I can also start procuring rice, and if Iran is buying so much rice from India, why can't I start? But if it is 98.5 and the India is the only market, you see it will be flooded with L1 competition. Your L2, L3 is taken by BOT negative, India is 98.5, so certainly you don't find Philippine rice being sold in Iran and Chinese rice and Malaysian rice and Thai rice. So L2 is not there. But if the percentage is 98.5, this means every L1 is targeting its rice exports to Iran. So as a startup, it becomes again very difficult proposition and the market is extremely saturated. So we need to find our own new destination from a startup standpoint. So what we do in this scenario is, let's go back and click on Saudi Arabia. So what's the scene of Saudi Arabia? Again, India is capturing 78.5. Again, for established company, beautiful. For India, beautiful. China, for that matter, the third largest importer. Are we able to capture the Chinese market? Not really. It is the Thai rice which has captured the Chinese rice market, followed by Myanmar, Pakistan, Vietnam, Cambodia, Laos. और ये क्यों होता होगा? जो इफ जो चावल ईरान में इतनी अच्छी पोजीशन बना सकता है, वही इंडियन राइस चाइना में पोजीशन क्यों नहीं बना पा रहा है? It is all because of the fact, guys, what I also connected with the next Saturday session with me is the price competitiveness plays a very important role. What this particular chart is trying to show you is the import structure of one of the third largest importer of the product that I am wanting to sell. So if I'm looking if I am wanting to sell my product to a Chinese buyer, I will find a huge competition from Thailand, which is capturing 24.6% of the total Chinese import of rice. I am trying to find out 18.6% of the total Myanmar, and I don't find India is 0% present. और ये क्यों होता है? If you are so hell bent to find a buyer in China, there are two conditions in which I can strike this balance. Number one, if I need to work out my position and still want to do some business of rice in China where it is absolutely zero so far. Most of the time, I miss this market because of the import duty structures. And that's the reason I go to the next step of step 3 that we see. Step 1, who will buy my product? Where we see the global importers. Then I go to yearly time series and see the growth rate. Is the demand increasing in these markets? Number 3, I click on those markets where I'm convinced that last 5 years the demand has been increasing. I will see who are my competitors in these markets. That we see L3 players like Thailand, Myanmar in the Chinese market. Step number 4, as we see, India ka competition is very high against Thailand, Myanmar, Cambodia, Laos, and all the Southeast Asian countries, and we have 0% when it comes to China. Step 4, we want to rationalize it. Is it advisable to venture into such country? No matter China may be the largest buyer of this product, but is it advisable for me? And मैं आपको बहुत practically बता रही हूँ that most of the companies run after looking for a buyer in the US market. मैम एक बायर यूएस में दे दो, कोई भी प्रोडक्ट कर रहे हो, चाहे वो दे आर सेलिंग एग्रीकल्चर प्रोडक्ट और दे आर सेलिंग एन इंडस्ट्रियल प्रोडक्ट, रबर, कॉयर, प्लास्टिक, इलेक्ट्रॉनिक, मैम यूएस में बायर दे दीजिए, यूरोप में बायर दे दीजिए, irrespective of the fact we do not have any trade agreement. US is logistically very far off. Maybe opportunities in Africa is much better. Opportunity in Korean market is much better. So step 4 becomes a decision making parameter that despite knowing that US is the largest buyer of this product, maybe I am not made to sell this product to the US. So don't get carried away by these data points that US is the largest buyer of this product, because number one, it can be a BOT positive market which will not entertain your smaller orders as a startup. At the same time, the import duty for Indian commodities may be very, very high as compared to the import duties offered to your competing player, which will have a huge impact on my final landing price. Let's do that. So what I do is I go back to the trade map, and the trade map offers you a facility to download this sheet as an Excel sheet. Let's calculate the final landing price of Indian rice versus the L2 players. Okay, so if I click and find out, okay, So let us try to see what is the final landing price. If you look into the list of supplying markets for the products imported by China, I will okay, I hope it's much visible now. So we will have this value imported in 2019, and the last column is average tariff estimated by China. So these are the import duties that the Chinese would offer every L2 player, including India. So let me click on delete this, and let me click on two things, guys. There is something that you will find as unit value realization, which is the US dollar per unit. So let me delete the irrelevant sections. So the unit value is the price at which the Thai price is now has reached the Chinese port. So it's basically the cost, insurance, and freight. It does not have the import duty calculated. So I will just click on this and delete it. What is important for me as what is the tariffs, that is it. So if you look into Thailand, the average price at which the Thai rice is reaching the Chinese is 807. The import duty that Thai rice has to pay to enter the Thai market, the Chinese market, is 50%. Howsoever, the import duty that India has to pay is 65% with the price that is 420, the unit price realization. So most of the time, if you see this import duty is basically the cause of having a poor share against your competitors. So why Thailand is having a better price competitiveness is all because of the import duties that they have to pay at a much cheaper price. So we need to understand that most of the time Cambodian rice is entering at 0% rate of duty. So we need to understand that the reason of shifting to a new destination is pretty clear, but the rationale of identifying which new destination it should be will be at two front. One, we will see how price competitive we are as against my competitor through this unit value realization, and then finally we will see how much is the import duty that we have to face to enter that market. So that are two decision parameters to check what is the final landing price of Indian commodity as compared to the competitor's commodity. So China is not a fetchable market for us. So which market is great for us? So I keep doing this exercise, and sorry, this is again, okay, we need world buyers of rice. So Saudi and Iran are good for established companies. China is not good for either companies. Let us talk about another Southeast Asian market, which is Malaysia. And we found that yes, Vietnam is my competitor, Thailand is my competitor, but India is having a gradual decent export share. So whenever the export share is between 2% to 10%, it is a very decent market. It indicates that Indian commodities are exported in that market. It is acceptable in that market. The buyer is aware about India as a product, Indian product, and at the same time, it is not saturated by Indian L1 players, and it is a BOT negative market. So that technically, in totality, offers you a very interesting scenario. Please note down, there is another website if you want to note the concept of how do you get to know which market is the best market for India uh, in terms of the import duty. Assuming that import duty becomes one of the prime decision making parameter, because that decides. So kai bar companies come to us that, ma'am, which is the best market for my product that I manufacture in my factory, jahan pe mere ko duty nahi lagni chahiye. So what happens in this scenario is we go to another website called macmap.org. This is market access. It helps you to identify the custom tariffs, tariff rate quotas. We'll talk about it in my compliance session, what these tariff rate quotas and regulatory requirements are all about. But you can look into analysis, like you can just compare. You can compare the markets, you can compare the L2 players, you can compare the HSN codes. You can, if you want to compare the markets, so you can just select the exporting country. Say you can select as India. You can select the countries as all because you want to compare, and you can look for 100630. Say for example rice, and you search. So now you see you have Afghanistan, Algeria, Argentina, all 197 countries, and what is the import duty that Indian rice will face when it comes to Afghanistan, Albania, and you can immediately find out that which countries are offering you 0% rate of duty. So it's a lot of this. Australian market is giving you 0% rate of duty. Then again, Bahamas, Bahrain, and it is giving you Belarus, the CIS countries, and you have 10 such pages that you can try to look forward to. So you're trying to take a call from a perspective of import duties, from a perspective of BOT negative, from a perspective of L2 player, from a perspective of L3 player, and in totality you are taking a call. Having said so, now what becomes very, very important, and the final step that becomes very, very important for us to take a call from identifying a market is also the quality barriers. Most of the time the import duties are still very low. For example, Australian market. So if Australia is offering 0% rate of duty for Indian rice, does it mean that any company from India will start looking forward for an opportunity in Australia? Not really, because before entering the Australian market, the import duties may be zero, but the compliances that are required to cater to the Australian market may require an initial investment of 5 to 7 lakhs. Because until the time you have all the audits done, you will not be able to enter the Australian market. So that is the step number 6 that we will compare in my next to next session, Saturday class, when we talk about managing global compliances in export, where we talk about different sectors, what are the quality barriers and the reasons why your product may get detained by the custom inspectors of the foreign market. Before that, let me summarize. First, choose a market. Which are the global importers of your product? This will give you answer to my first question, who will buy your product? There may be many countries in the world who will import your product, but I will select a market as a startup, which is a BOT negative country, which means the consumption is more than the production. In such market, even if local companies are present, they will not be a threat for you, because if they are producing, then they are not producing enough to satisfy the domestic consumption. So it is very good for you as an exporter. In such BOT negative countries, since the importers are buying from me to consume in their local market and not re-export, it makes sense for me to understand the local consumer behavior, customize your product as per the NTLs to gain more market share. And that is the reason I finished this whole concept and then ventured into my module 2 about how to understand the local consumer behavior. So in such a scenario, I will participate. Now you have, in most of the countries, give you an opportunity that either you can participate as a B2C fair or you can participate as B2B fair. So it all depends. In a B2C fair, who will be your audiences, and footfalls will be from the local companies, from the local consumers. So a country which is a B2, a balance of trade negative countries, where the consumption is expected to be high, and the consumption is driven by the local companies, customize your product as per the local and participate in a B2C, which is buyer to consumer fairs. However, if you are looking forward for opportunities in a B2B fairs like Gulf Food Fair, वहाँ पे दुबई का फुटफॉल नहीं होगा. वहाँ पे एक मोरक्कन बायर भी आ सकता है, वियतनामी बायर भी आ सकता है, यूरोपियन बायर भी आ सकता है. इट्स अ B2B fair. Do not invest your energies to customize your product as per the consumer requirement and perceptions in the Dubai market, because Dubai consumers are not your final consumer. They are coming there to actually do a B2B fair. Dubai is just a venue of trade fair, like Pragati Maidan for that matter. You'll be surprised to know, guy, whenever there is a Pragati Maidan, every year. We don't know whether this saal November mein hoga ki nahi. You will see hall number 16 is flooded with Pakistan, Uzbekistan, and Vietnamese people. To an extent, whenever Vietnamese come and participate, Vietnam is my biggest competitor of HS Code 44, which is my wooden sector, furniture sector. वियतनाम के स्टॉल पे सहारनपुर के स्टॉल से ज्यादा फुटफॉल होता है. Uzbekistan also brought wooden furniture last year, and they even customize their product to an extent that they connect with the real estate before participating in the Indian fair. They know that it is a B2C fair, so the local Indian population will come and buy this product. So they understand they connect with my real estate buyers to understand what is a room size, what is a family size. The family sizes are shrinking, so they will not bring a 6-seater dining table to the fair anymore. They'll bring a 4-seater. While the same Vietnamese, when they will go to the markets like Dubai, markets like CIS, or Latin America, where people are still having joint families, and the entire head of the family, the Muslim families, have numbers of family members. They will have 12-seaters. So we need to customize. HS code is the same because it's a dining table at the end of the day. So everybody is trying to take their product and customizing it as per the consumer requirement, and that takes me to the next step. In order to become price competitive, we have to work at 2 levels. One is design innovation, and one is your price competition. So apart from the basic custom duty that MAC map will offer you, if you look into the MAC map scenario, it gives you multiple things, and it is very, very important. So if you can look into analyze, you can analyze the trade agreements, you can analyze the tariff structures, you can look into the trade remedies. So let me talk about what this trade remedies is all about. आप जब भी किसी कंट्री में अपना बिजनेस की अपॉर्चुनिटी ढूंढोगे, it is not only the basic custom duty which is there on your product. It could be an anti-dumping duty in addition to the basic custom duty, which will keep adding to your cost. So if I have to select 2 markets, for example, you will find a BOT negative market, which is a Chinese market, and a BOT negative market, which is a German market. You will try to figure out that the basic custom duty, मेरा तो trade agreement ना China के साथ है ना Germany के साथ है. So if they're the biggest BOT negative market and I have to pay the same rate of the custom duty in either of these market, you tend to see and balance out the 2 market as one. But in one country, you have to face a huge trade remedies which you should be tackling to, because that will be the duty that you have to pay. ये कौन सी duties होती हैं? There are in the form of an anti-dumping duty. They are in a form of a countervailing duty. They are in a form of a safeguarder. So we need to understand कि ये trade remedies होती क्या है before taking a call, that if the import duties are same and they are BOT negative, and you figure that अच्छा खासा import हो रहा है मेरे product का, please add on. These duties will add and squeeze your profit margins. So we need to be extra cautious of picking up a product. So please understand that the tariffs and additional add-ons on this basic custom duty, subsidies and non-tariff barriers, ये तीनों का mixture आपके लिए जब तक congenial नहीं होगा, buyer नहीं मिलेगा. Okay, so we have to be extra cautious. And what is the role of this tariff? Suppose the FOB value for India is $100. The US is one of the dream destination of a lot of companies who comes to us that ma'am US में buyer ढूंढ दीजिए. So we keep explaining to them the simple concept that your FOB value, for example, is $100. You are a small trader. You are an MSME. आपके पास factories नहीं है. आप बहुत लिमिटेड बजट से अपना बिजनेस शुरू करना चाहते हो तो आपकी प्राइस कॉम्पिटिटिवनेस बहुत ज़्यादा नहीं होगी. Now you are aiming at, ma'am, US is the largest buyer, and I've seen that a lot of business is happening, and that is your general awareness that pulls you to the US market. The US import tariff, for example, is 400%. Your final landing price will become $500. आपका competition किसके साथ है? The US, who may be having a local presence in the same product commodity. The government may be offering certain production level subsidies. This happens hugely in case of farm subsidies in US. It happens hugely in case of manufacturing subsidies given at the production level in China, that local price, production price is $80. ऊपर से the US government ने उसको $20 की सब्सिडी दे दिया. So the local price available in the US market by the locally produced company of the same commodity that you would like to export is $60. Your product is $500 and the local price is $60. You may be the best guy on the world. Why should a consumer buy a $500 product as against a $60 product? So we have to be extra cautious about the impact of these huge tariffs that you have to pay in countries where India has not been able to negotiate the trade agreements. And specifically, these import duties would technically be talking about known as a concept. So आपने कई बार सुना होगा what is MFN, what is MFN and most favored nation, ये होता क्या है? So in the market identification process, it is very important for us to understand the concept of most favored nation. What does it indicate? That whenever a country is a WTO member country, okay? So India is at founding in 1995 में इंडिया ने WTO ज्वाइन किया था. ओके, पाकिस्तान ने भी ज्वाइन किया था, ब्राजील ने भी ज्वाइन किया था, यूएस ने भी ज्वाइन किया था. आज की तारीख में देयर आर 164 members in the world who are the WTO members. Now what happens here is, as a law, what happens when you join a WTO forum is you are bound by certain rule. So you have to follow the rule of the game, else if a company is not aware about these rules, you may be behind. Uh, I will not say that you'll be behind bars, but you may end up paying a huge compensation. So the way if you are into a family business, the way your grandparents must have started doing business prior to 1995, you can't afford to ignore the rule of the game, because it's a legal binding commitment that Indian government has made at the WTO forum. As an Indian citizen and an Indian company wanting to go global, you are bound to follow the same rule. What is the rule? There are two basic principles of WTO, that is most favored nation and national treatment. I reserve my comments on national treatment for my subsequent sessions with you, because we are talking as tariff is a very important point, and किस कंट्री में आपके वही 6 digit कोड को अलग अलग ड्यूटी मिलता है. सो मेरे लिए जानना बहुत ज़रूरी है दैट मैं जिस कंट्री में जा रहा हूँ उस कंट्री में. सो लेट अस टेक अ वेरी इंटरेस्टिंग कॉल. सो सपोज I want to venture into a Chinese market, or I want to venture. So let me give you an example. I am an exporter of a product, and say I am an exporter of an electronic products. My biggest consumer or my dream destination is a US market. So I am an Indian company and I want to target the US market. I pay 25% rate of duty to enter the US market. That's the law of the game is the L2 player who is supplying the same 6 digit code, for example, is Australia. The other is L2 player is Canadian. The third company is coming from, say, for example, Mexico, or let us take an example of Bangladesh. And the third country, the last country, can be Algeria. Okay. Now, the law of the rule The rule of the game as a most favored nation is, if a company is operating from the domain which is a WTO country status. So India is a WTO member, Australia is a WTO member, Canada, Bangladesh is a WTO member, and so is the US. So if the buying country is a WTO member country, and all the supplying country, suppose it's an example of all these countries are exporting 100630 to the US market. So technically, the US as a buyer will be bound to offer exactly the same duty coming from the HSN code offered by other players in the market. So अगर इंडिया के चावल को यूएस जाते के बाद 25% ड्यूटी लगता है, तो ऑस्ट्रेलिया के चावल को भी 25% ड्यूटी लगेगा। इन अ नॉर्मल सिनेरियो कैनेडियंस एंड बांग्लादेश के प्रोडक्ट को भी और अल्जीरिया के प्रोडक्ट को भी 25% ड्यूटी लगना चाहिए था एज पर द रूल ऑफ द गेम. But then there are certain exceptions to this clause, and that exception will help you understand and take a call that I should not get carried away. I shouldn't get carried away by a buying lead coming from a US market, because I should know the procedure to evaluate the that ये buying lead कितनी successful हो सकती है. वो क्यों सक्सेसफुल नहीं हो सकती है is because if I am giving 25% to the US, Australia is also offering 25%, the Canadians may not, this rule of the game may not be applicable to the rice coming from a Canadian buyer, only because one of the exceptions, if the product is coming from any country, that two countries are WTO member countries, in a normal scenario, the WTO rate of duty should be applicable on all, because that the MFN says that if I'm a buyer country, I will have to offer the same rate of duty to every country who is supplying me the same product. Exception is, apart from being a WTO member, if the two WTO members also sign a free trade agreement amongst themselves. So we have the North American Free Trade Agreement, which is technically, you must have heard, NAFTA, which is between US, Canada and Mexico. That is the reason the Canadian product, same HSN code जो India 25% पे आ रहा है, Canadian 0% पे आ रहा है, because they have a free trade agreement. So वही rule of the game overpower और rider हो जाता है. Why there is a possibility that Bangladesh, textile product for that matter, Bangladesh is the largest textile competitor for India, right? Such a small country, but giving huge competition in the European market is only because of a concept known as, that you must have heard. There is a hue and cry that Indian handicrafts को यूरोप में, यूएस में generalized system of preferences मिलता था, अब नहीं मिलता है, right? So they have withdrawn. So what is the meaning of generalized system of preferences? A least developed country is expected to have more preferences in a developed country market. तो आपका L2 player क्या developed है कि developing है कि least developed country है, आपके selling proposition पे इसका बहुत बड़ा impact आ जाता है. So we have to take a call. If my competitor is a developed market and they do not have any trade agreement, I am relaxed, because both of us will have the same rate of duty. But despite being a developed market and also a WTO member, if they have a trade agreement amongst themselves, I end up paying a very high, and I shouldn't be even expecting. Why will an importer give an additional 25% duty जब उसको logistically nearer? यही होता है मेरे अल्फोंसो मैंगोज के साथ. I always want to target the US market, and Mexican mangoes are logistically nearer, better taste acceptance, better acceptability, and they venture into the US market much more relaxed duty rate of 0%. यही होता है यूरोपियन मार्केट में अब मेरे नेंद्रिन बनानास के साथ, that we are the largest producer of bananas, but Costa Rican and Ecuador and all these countries are flooded in the European market, and technically we get lost. यही होता है टेक्सटाइल के साथ, because of the Bangladesh as my, or Cambodia as my as my target, as my L2 players, because when we are country of origin, we pay MFN rate of duty to enter the US market. The same product, if it is made in Bangladesh, enter at less than MFN rate of duty at the GSP benefit. तो ये मेरे लिए जानना बहुत ज़रूरी है that what level of tariff benefits that I'm expected to gain against the L2 player, which will decide the buyer's preference against an Indian product or a Bangladeshi product. Why did I mention Algeria here? Is because of the fact that ऐसा कई बार हो सकता है that your L2 player may not be a WTO member at all. Therefore, if the country is not a WTO member, the law of the game is not applicable on exports originating from Algeria, and European buyer is all free to offer either say 75% rate of duty, which is more than MFN, or 15% rate of duty, which is less than MFN. So if my L2 player is having 75% rate of duty, it makes sense for us to enter the US market before Algeria becomes a WTO member. If Algeria is going to get, for example, we are sitting on 5th of December and we see that one of my competitor who is, ये होता था किस केस में, edible nuts के केस में, कब Afghanistan was used to give me a huge competition in edible nut, pista, badam and all these akroot in the US market. So when Afghanistan was not a WTO member, the rate of duties were very, very different. And India used to enter at an MFN rate, and US had all the flexibility to offer the Afghani edible nuts any rate of duty that they were interested in. So we have to look for those windows that ये क्योंकि MFN rate से कम भी हो सकता है, ज़्यादा भी हो सकता है. We always used to keep a very close observance of how the rates of Afghanistan and rate of duties are changing. So we have to be extra cautious that not only that a country is BOT negative, we also have to talk about the status of L2 player, whether it is a developed, developing or LDC, because LDC is preferred more than the developing and then the developed market. Even if it is a developed market, don't be relaxed. If the two countries have a free trade agreement, I may get lost in terms of the import duty structures. And finally, if my L2 player is not a WTO member, I need to be extra cautious because the rule of the game doesn't apply for them, right? So that's about your analyzing the L2 player from a tariff standpoint. And what is the concept of most favored nation? Now concept that most of us normally miss. जो आपने अभी ट्रेड मैप में लास्ट कॉलम में इंपोर्ट ड्यूटी देखा, जो आपने मैक मैप पे applied rate of duty dekha, you just saw on MAC or that you just fill in here and you got the list of 2.5% and 5%. What are these import duty, guys? These import duties are the applied rate of duty. Suppose you take a call. Most of the time when companies come to us that ma'am ये product कहाँ बेचना चाहिए? Our first question to them is that how ready are you for exporting? Are you ready today or you will take a call say ma'am अभी तो हमने सोचना शुरू किया है. We will take another maybe year and a half or 2 years by the time we decide a brand name, fix our sourcing, we'll do some level of domestic business before we venture into export market. So if your lead time is 1 year from now, after you attend our sessions, 2 years from now, it is quite likely that the applied rate of duties may change. And why will they change? There is again a WTO global law against it. What is this law? Whenever a country is joining a WTO forum, every country has to announce two rates of import duty for the same product category, which is known as the bound rate of duty and the applied rate of duty. For example, I am a rice exporter. Now, I am a pharmaceutical exporter. I have choice. I can look for a buyer in the Australian market, Canadian market, Mexican, Moroccan, Thai market. All of these countries may be a balance of trade negative. If you look into the last column of trade map, it will give you an import duty as 100%, 80%, 60%, and I technically get carried away to a Thai market because it's offering me a 10% rate of duty. But that 10% if I am delayed and I'm not immediately ready to export, it is quite possible, friends, that the government has a legal right that when I join a WTO forum, मुझसे पूछा जाएगा that these are the list of 5,000 products at a 6-digit level. You are a new company, you are a new country who is joining the WTO forum. Please announce to all the other WTO members and the exporters of that what is the highest rate of duty that you will ever charge on this product. That is called the bound rate of the product. Meaning, आप अगर किसी कंट्री ने थाईलैंड ने बोला मैं चावल पे 100% बाउंड रेट ऑफ ड्यूटी रखता हूँ, दिस टेक्निकली मीन that this is the highest rate of duty that they will ever charge on rice. But थाईलैंड को हमेशा ये फ्लेक्सिबिलिटी रहेगी depending on how much rice they want to import or depending on their own domestic market supply demand situation, the applied rate of duty can vary anything between 0 to bound rate. वो उसने highest rate announce कर दिया है, right? लेकिन उसने उसको पूरी लिबर्टी है कि वो 0 से लेके 100 तक कोई भी applied rate of duty लगा सकता है. So if the applied rate of duty, when you are seeing macmap.org or you're seeing TradeMap, it's an applied rate of duty in 2019. हो सकता है post COVID the entire scenario changes and they don't want to import rice or they want to import more rice or whatever. They have all the right to shift this 10% to 100%. So you have to be extra cautious that what is the bound rate of duty on that product. If I am delayed, the country has the legal right to shift the applied rate. So मैंने अपनी costing and pricing and sourcing करते वक्त जो pricing दी है अपने sourcer को वो 10% rate of the final landing price के हिसाब से दी है. By the time I'm actually venturing into the market, it's 100% and my entire profit margin goes for a toss. So I have to be extra cautious in venturing into a particular destination, keeping in mind the two levels of duty structures. Most of the time, companies get pretty excited that let's start a value-added product business. ये भी गलती करते हैं हम. That you say that man, you want to put up a factory and अब तो आत्मनिर्भर scheme है, मुद्रा loans है, EPCG scheme है, lot of machines and processing units पे सरकार काफी incentives दे रही है. Whatever policy benefits are announced on a processed product, please ensure and see a concept of tariff escalation. Very, very important. For example, I had an opportunity as a dairy company. मेरे पास ऑप्शन है या तो मैं मिल्क बेच सकता हूँ या मिल्क प्रोडक्ट बेच सकता हूँ या मैं ग्रेप्स बेच सकता हूँ या मैं ग्रेप जूस बेच सकता हूँ. So you see in the European market, the import duty on grapes is 18%. And we are doing one of the very success story of Indian grapes, Thompson seedless grapes is in the European market. A very success story of old product, old destination where we have been really doing a great business of grapes in the European market. पर वो मोबाइल मुझसे grapes क्यों खरीद रहा है और import duty इसलिए कम है क्योंकि वो मेरे grapes से खरीद के अपनी processing unit of grape juice और अपनी brands निकाल रहा है. Now, if you as a company get hyper excited that there is a government incentive that is being announced, that now आप एक machinery EPCG scheme पे 0% rate पे ला सकते हो, and whatever reason, I mean, you can take your personal call as well, but then if you are shifting from manufacturing of grapes to grape juice or from cotton to ready-made garments or integrated chips to mobile companies, if you are shifting to a value-added products, please ensure that you select your market very cautiously because उसी market में आपकी import duty on primary products may be much lower, offering you a great opportunity. But when you shift to a value-added product, you become a competitor to the local brands of the European market who were buying grapes from you to establish their own brands of grape juice. So आप उनके लिए एक L2 player हो जाते हो, and they don't want that. So that's the reason for a value-added product, they will escalate their tariffs from 18% to 215%. Same goes for apple, 17% in the Japanese market, apple juice is 34%. So we have to be extra cautious. ये तो agriculture का है. You can see for leather, you can see for a lot of these products but you should be extra cautious if you're trying to venture into a processed product category. Otherwise, shift your markets accordingly, and that's how you can prevent working. Apart from the basic custom duties, bound rates, applied rates, even on applied rate, if you select a Thai market where the applied rate of duty is, for example, 10%, but that's just a basic custom duty, you can have a lot of prohibitions. You can have prohibitions, it can be in multiple forms. It can be prohibitions of importation in bulk. For example, there are many countries in the world where imports of wine is allowed only in bottles of 750 ml or less. There can be prohibitions on the use of, on the imports of remanufactured goods, second-hand cars. So there are a lot of these prohibitions have to be taken care of. Then there is a concept of safeguard duties. In a normal scenario, bound rate is the highest rate of duty that a country can ever charge. लेकिन कई बार क्या होता है, suppose a country is facing a huge import surge, वो क्या करेगा, वो अपनी applied rate of duty को bound rate of duty तक बढ़ा देगा, because that's a legal right of countries to do that. They don't want any more import, because beyond an import, their local industry ka business is captured by a foreign brand, so they will not like it, and you are that foreign brand, so you have to be extra cautious that वो country कैसे repercussion करेगा, what will be the retaliation measure which will impact your profit margins in selling your product in a BOT negative economy. So I mean, that's one reason that we prefer a BOT negative economy, because जितने भी trade defense mechanisms हैं, वो एक BOT negative country में थोड़ा minimalistic होते हैं. So safeguard का मतलब क्या होता है, that when you take your import duty from applied rate to the bound rate, you again the countries ने कहा यार मैंने अपनी import duty इतना 10 से लेके 100 तक उठा ली, ये तो मेरा legal right था, इसके beyond तो मैं उठा नहीं सकता, because I have bounded this at the WTO forum when I joined the system. They will make an extra request to WTO that please allow us to have an additional rate of duty, because otherwise my domestic industries businesses are going out of market. Please be extra cautious. ये information आपको कहाँ मिलेगी? Director General of Trade Remedies. So you'll get all the anti-dumping, safeguard, countervailing, and this is how you get the information about the anti-dumping duties. So you go to the DGTR website, select your HSN code, select your country, and cross-check whether there is any anti-dumping duties, any countervailing duties, any safeguard duties that are applicable on your product categories in that particular market. Avoid paying this additional duty by avoid looking for any expansion opportunities into those markets. Okay. Now, when we talk about, there are many countries in the world where the BOT negative can come. They can be WTO members, and they can also be those countries where technically India may have signed a regional trade agreement. So in next session, for the example, I'm just giving you a base for my next session is, it's a case analysis of a carpet, which is made carpet of a man-made textile 570232. You see, post-COVID, it is a time to exploit the trade agreement to a large extent to become price competitive in a demand-shrunk market. For example, Australia. If you look into Australia, Turkey and China has 0% rate of duty as compared to 5% of India. Brazil, for that matter, in case of Brazil, for the same man-made textile, import duties all, India has a minimalistic share despite the same rate of duty. In case of Japan, India could have 23% share in our man-made carpets as compared to China and Turkey, only and only because we have Indo-Japan trade agreement where we are paying 0% rate of duty. So it's time to understand details of which are the trade agreements that are existing in a global market, right from NAFTA to CAFTA to ECOWAS to GAFTA, SAFTA, AFTA. So we'll see in my next session how these trade agreements will drive the show in a post-COVID scenario in a market where a country is a great BOT negative country and we have an additional benefit. So today we have seen how to venture into L1 L2 L3 को ध्यान में रखते हुए कैसे हमें एक इम्पोर्ट डेस्टिनेशंस को चूज करना चाहिए. एंड नाउ इन माय फाइनल मॉड्यूल बिफोर वी फिनिश, we need to be extra cautious about the market segmentation, meaning we need to know that जिस मार्केट में मैं बायर ढूंढने जा रहा हूँ वहाँ पे इम्पोर्ट ड्यूटी भी ठीक है, बैलेंस ऑफ ट्रेड भी ठीक है, मेरा L2 प्लेयर का स्टेटस भी ठीक है, and I do not have any challenge from L2 and L3, but L1 अभी भी problematic है because जो benefit इंडिया को चाइना के अगेंस्ट मिलेंगे in a third country market वो हर इंडियन कंपनी को मिलेंगे. So as an Indian company who wants to start the business as an MSME may have a lot of L1 player, and how do you distinct yourself at a very small level is what we are entering into now. आप बहुत सारे तरीके से अपने आप को कॉम्पिटिटिव बना सकते हैं इन द सेम प्रोडक्ट कैटेगरी इन द सेम डेस्टिनेशन if you can scan the market where you are exporting on 10 to 12 parameters. Understand what is the age group of your destination. Understand what is the income group. वो क्या खाता है, क्या पीता है, क्या religion है, lifestyle क्या है, color preference, hobbies, technology, health, and I'll give you a multiple example for that matter. This was a company that we were helping. They were technically into handicraft products, and they were into they wanted to venture into CIS countries. So we technically told them that CIS is full of Kazakhstan, Belarus, Azerbaijan, Armenia, all these countries. सरकार की तरफ से जो आपको कैटेगरी MEIS बेनिफिट मिलेगा वो तो हर CIS कंट्री के लिए मिलेगा, but it is your choice. If you are looking for a market selling opportunities in countries like Russia and Kazakhstan, यहाँ पे 50,000 का एक टेबल लैम्प तक बिक जाएगा because the purchasing power parity is very high. Howsoever, if it is Armenia and Kazakhstan, 100 रुपए की प्रोडक्ट से ज़्यादा यहाँ पे डिस्प्ले के लिए कुछ नहीं ले जाना because कुछ नहीं बिकेगा. There will be a wow factor if you take a very priced, high priced handicraft product. There will be a very high wow factor, but the purchasing power parity of these consumers are not that great. So I need to understand how the country's economy functions before deciding which product in the same segment should I be catering to in a different market. Then it is very important for me to know what is the demographic profile of that country, which means I was surprised when we were analyzing and we were helping on this case study that I'm trying to show you. Very successful case study of a handicraft company wanting to explore CIS market. We started analyzing that be it any country of CIS, the working population is the maximum. Armenia, 43% people between the working age group of 20 to 40. 45% of Belarus were of the same age group, and it was absolute. If you look into Japan, it is completely reverse. It is the maximum population of adult people. The mortality rate is so poor. So adult diapers becomes a very interesting market in Japan. So you need to understand किस age group में the countries have in which particular age groups. Please be very cautious about the ethnic sensitivity of a country. Now, for example, if you're looking into a CIS market, it is primarily a Muslim country, right? So this was a hand holding of the same handicraft products. So if you look into the left hand side, you will find that these are human figures, gods and goddesses. ये भी paintings है. And if I'm dealing in the same HSN code, import duty are the same, HS code is the same, but buyer नहीं मिलेगा because it is a flora and fauna concept on the left hand side, and the theme of the same HSN code painting is human figures. In Muslims, the Quran doesn't allow human figure to put as your own portrait as well. So what we did, this was a great example of CIS, and what we did in CIS, we did not stop at just flora and fauna. We also analyzed the postal stamps of CIS, and we found that when CIS was USSR, it was governed by a king which used to have a huge, fan flowing of a horse. So whether you go to Turkmenistan or Kazakhstan, the entire stamps had this motif of a horse in it. And then when we actually analyzed everything that we took, चाहे हम टेक्सटाइल प्रोडक्ट लेके गए, हैंडीक्राफ्ट प्रोडक्ट ट्रेड फेयर में लेके गए, anything of stone, but dhokra art, everything we took as a horse, and the horse was such a pleasant product there. So sculpture is a sculpture, textile is a textile, but you need to understand and connect with the religious sensitivity of the people. यही चीज अगर हम साउथ ईस्ट एशिया लेके चले गए, it's a when we questioned in our survey to companies who were participating कि क्या लेके जा रहे हो, they said ma'am Lord Buddha लेके जाएंगे because it's a Southeast Asian market. I said, did you realize that the entire Swarnabhumi airport of Thailand is depicting Hinduism? So they, as much as Lord Buddha, there is a equal prevalence of Hinduism, which is the postal stamps of Lao PDR of Thailand is depicting. So we took Lord Vishnu, and we were so different than people who brought everywhere. You had sculptures of Lord Buddha in the fair. We took sculptures in stone, in metal of Lord Vishnu, stone carving, marble, and it was just a big hit. You need to understand. Even if I would have taken Lord Buddha, never take, there's a religious sensitivity. HS code will be the same, import duty will be the same. But it is wrong to buy and use Buddha symbol in any of the Southeast Asian countries. It is a disrespect. You'll be behind bars. And people, most of the time, जितने भी सारनपुर के लोग हैं, वो सब बुद्धा का head लेकर जा रहे थे. So we have to be understanding the religion plays a very important part. Even if you see the complete statue of Buddha, one is sitting on lotus, the other is not. So Buddha and lotus, Buddhism is all about lotus. So people have to get connected with this. For example, it's the Christmas is just on time. The Southeast Asia, which will give you immense opportunity. Philippines holds the world's longest Christmas. It continues into January with a feast of three kings. So it's a huge market for Christmas decoration, begins right from September until January, right? And Christmas is they're all very eco-friendly. So bamboo products, paper products, handmade paper products, in सबके Christmas lightings and all, a very, very big market when it comes to Philippines amongst all the Southeast Asian countries. Alternatively, the world's largest Muslim population we thought was Middle East. The world's largest Muslim population is in Indonesia. And the culture of Indonesia does not, the Quran forbid men in Islam to wear pure silk. So we have to be very cautious that if I'm dealing into a business of silk products at HSN code 50, Indonesia is not the market for me. These are religious sensitivity that we talk about. See the temperature and climatic conditions. For example, for a lot of these kantha and decorative umbrellas, we sold it to countries which are very high temperature countries. So there was an umbrella which was sold nothing but decorative umbrellas. We connected into the utility. Again, there are many countries which are suffering with a lot of diseases. Try to make your product in sync with the diseases and give it a brand story which talks about. This is a very interesting story of the jute slippers. We just created it was a basic traditional product. We created some acupressure points on that and sold it to the CIS market. And CIS was a country which is maximum coronary heart disease. And that's how we created acupressure points on this and converted a handicraft product into a utility product and a pharmaceutical product. So please understand, this is a case study of a company who was selling these Nandi Bell, and they were selling, the brand story was all about Shivji. I said, you're selling to a Christian country and you're giving a story of a Nandi Bell coming out as, I said, the minute we said, this is a bull at the end of the day, and you're trying to sell it, let's sell it to a Latin American country and give it a connection of this Nandi Bell to a Spanish bull, which is connected to a bull fighting, and we gave them a market to Spain, Portugal, France, Mexico. So आप क्या चीज दिखाते हो? I mean, I'll give you a case study of Banarasi silk sarees, and where along with eBay team, we did a big drive that when their inventories of Banarasi silk sarees were not coming out because they were showing Indian celebrities and models wearing the sari. I said, it's a piece of cloth. So we started showing the same saris and we started clicking product pictures as silk curtains, and it works. Silk beach floors as bed sheets, the same saris inventories could be cleared, right? The same thing that you're wearing on foot, There's a tradition to wear it in neck in Malaysia, in Myanmar. So who stops you in selling your product? The HS code is the same. The custom and tradition needs to be pretty, pretty five. So I think I have a lot of case studies to share, but the summarization of my session technically be that we are trying to take a call from a perspective of understanding the market opportunities, both from a trade data standpoint, from a competitiveness standpoint, price standpoint, tariff structure standpoint, non-tariff structure point, and finally, when we shortlist these countries, we have to understand the buying behavior of that country from 15 parameters and try to give a brand story which is closely connecting to the consumers. So I will stop my session here and take any questions if there are. Okay. So if there are any questions, you can keep it on the chat box. I cannot see any questions so far. Okay. So I cannot see any specific questions that are being asked. Maybe how to find a better way to find a buyer is what we will do once I finish all the sessions with you. Maybe I can just give you certain interesting sites where the buyers, credible buyers can be sent. But my concern is that before venturing into buyers, if you identify countries in a very methodical process, maybe finding buyers will be much more easier because there are ways and means to get the buyers on board. So just even if the embassy must have given you to the buyers, the reason why the buyers must not have responded to you is because you're not well prepared. Your product catalogs might not have been prepared, keeping in mind the specific needs of the country, and it may be a very, very old product in an old destination. So that's the reason. So the challenge that Mr. Chittaranjan has actually indicated is a challenge of a lot of these startups, that you generally buy a buyer data from somewhere, or you start emailing them and you don't get responses because you probably have not done something additional as an effort and a very logical effort to woo your buyers and prepare yourself. So I think that's all from my side, and we will continue our discussion in the next class where by every session, whether it's a product selection for exports or market selection for exports, and next we'll continue our market selection when we understand how to take advantage of the regional trade agreements. And again, I'll give you a lot of case studies on, even if we have signed a trade agreement, how do you get in sync with the market segmentation process to close the loop? So that's all from my side. If we have any other questions. As a startup, you have raised a question. I would request you to please refer to my earlier videos where we have already done this session on how to choose a product for exports. There's a very methodical process of selecting the product for export and how do you customize it as per the NTLs of the final country. I think you should see the video of my session, last session and this session, and you combine the both to come to a great conclusion. And that will also help you how to, keeping the tariff structures in mind, how do you price your product, interestingly, will also be a part of that. So we still have 1 more minute to go in case. Okay. Thank you so much.